Polymarket and Kalshi CEOs back the same $35 million prediction market fund. Shayne Coplan and Tarek Mansour have spent years trying to destroy each other's businesses. Coplan runs Polymarket, the blockchain-based prediction market that exploded during the 2024 U.S. election cycle. Mansour co-founded Kalshi, the CFTC-regulated exchange that has fought multiple federal lawsuits to offer event contracts to U.S. residents. The two platforms compete for the same traders, the same liquidity, and the same regulatory real estate. Now both CEOs are writing checks into the same venture fund, 5cc Capital, named after the law that made prediction markets legal. The fund is called 5cc Capital, a reference to Section 5cc of the Commodity Exchange Act, the clause that governs how prediction market contracts can be listed and traded. It is raising up to $35 million and plans to back approximately 20 early-stage startups over 2 years, Fortune reported on March 23rd. The fund's two general partners are Adi Rajaprabhakaran, the second trader hired at Kalshi's affiliated market maker, and Noah Zingler-Sternig, Kalshi's former head of operations. Both spent years building the prediction market infrastructure from the inside before deciding the category had grown large enough to warrant its own dedicated venture firm. Their investor list reads like a who's who of crypto venture capital. Mark Andreessen via his Moneda Luna fund, Mickey Malka, Ribbit Capital founder, Kyle Samani, former Multicoin Capital managing partner, and a Millennium Management portfolio manager. More than 20 investors have committed ahead of the first close, which is expected within the next month. The rivalry that makes this unusual. Polymarket and Kalshi are not friendly competitors. Kalshi has been embroiled in roughly 20 federal lawsuits and state-level regulatory challenges as it fights to expand its contract offerings. Polymarket, operating on the Polygon blockchain and technically restricting U.S. users, has taken a different regulatory path entirely. The two platforms have publicly clashed over market structure, user access, and which model will win long-term. For both CEOs to back the same fund signals something specific. Neither believes prediction markets are a winner-take-all category. If they did, funding potential competitors or adjacent infrastructure would be irrational. Instead, both appear to be betting that the total addressable market is large enough that growing the ecosystem benefits everyone, including their own platforms. Adi knows that the next few years are critical to build out infra around prediction markets, Samani said, according to Fortune. Where the money will go. 5cc Capital is not looking to fund more prediction market exchanges. The fund's thesis targets the infrastructure layer, data tools, liquidity provision services, compliance systems, and prediction market index products. Think of it as the picks and shovels play for a category that is rapidly attracting mainstream financial players. That mainstream push is already well underway. Coinbase, Kraken, and Robinhood have all entered the prediction market space in recent months. Kalshi raised $1 billion at a reported $22 billion valuation. Polymarket's valuation sits around $20 billion. The combined market for event contracts has gone from a niche crypto experiment to a category that traditional finance firms are building dedicated desks around. The fund's focus on infrastructure rather than exchanges also sidesteps a regulatory minefield. Building data tooling and compliance software for prediction markets is far less likely to draw CFTC scrutiny than launching a new exchange. What this means for the prediction market stack. Prediction markets are following a pattern familiar to anyone who watched DeFi mature between 2020 and 2023. First, the core exchanges launch and fight for users. Then, once the category proves durable, capital flows into the middleware. Oracles, aggregators, analytics platforms, and compliance layers. 5cc Capital is placing itself at that inflection point. If prediction markets continue growing at their current pace, the 20 startups this fund backs will form the connective tissue between exchanges, data providers, and the institutional traders now entering the space. The crypto market as of March 24, 2026, shows BTC at 70,182, plus 4.1% in 24 hours. ETH at 247, 4.4%, and SOL at 91.45, plus 5.8%, with the Fear and Greed Index sitting at 33 fear. The broader risk-off environment has not slowed the prediction market sector's fundraising momentum.